I believe Charlie Gasparino is here. I know he's sitting next to me. You got a microphone on?
You need some Xanax?
What's Xanax? What's that do for you? Up or down?
It's down.
Down, okay.
You're feeling this Trump rally.
Oh, yeah, I'm feeling the Trump rally, all right. Now, wait a minute. I know your story, and it's an exclusive story. It's a damn good one.
Yeah.
You're saying that only a tiny fraction of the shares in Snap today are available to the likes of you and I.
So bear with me on this. Usually when they do distributions of the shares, most of it goes to the institutions. Some of it goes to what's known as a directed program, where the friends and family of the company, and then about 5% goes to retail. That's small, but it's still enough, right?
I'm sorry to interrupt you,
right?
But that 5% would get the offering price, like
$17 you get 17, and you can buy it through your broker.
And I can sell it immediately for the profit.
Right now, the Snap distribution is very heavily towards institution, as you would imagine, a lot more to the friends and family, and almost nothing, from what I understand, 1.5% of the 200 million shares that are outstanding is going to the retail. So that's a decline from the usual 5% down to 1.5%.
Wow.
Now, what is that doing to this deal? That is creating demand out of scarcity. And here's where the average viewer, the average investor that wants to buy this stock, there's probably going to be a pop. It could be a significant pop. As you know, the indications now are at 23 or something like that. I would be very wary, because what you're getting is not a buying frenzy based on whether the company's making money. We know it's not making money. Whether a lot of people love the company, which some people do, but is a very controversial company because it's losing so much. And a lot of people think Instagram and Facebook, you can do the same sort of thing. I don't take pictures, just so you know, of myself, and I don't care if they disappear or not, because that's not what I do. But I'm just telling you, there's scarcity of demand here, which is bidding up the price. That is a very scary situation for the average investor, because you're not going to get it. Most people are not going to get it at the IPO.
Let me summarize this. A very, very small number of shares have gone to people like you and I and Liz and Ash and Lance. A very, very small number.
Brokers that would give it to people like us.
Okay, that means a very small number of shares will be in very high demand. Therefore, the pop is probable.
And basically, those other shareholders, the institutions, the directed shares, which are family, friends of the company, including company executives, they generally hold on to those shares. Institutions will let out some of the shares as they start popping. And that's where you can get a real heavy bid on this thing at the open. And we're seeing it right now. It's going from 17 to 22. I heard 23 just before I got on the set. This is to me something I would stay away from. This is what we had with Twitter, by the way. Yeah. And it didn't turn out well. Now we should turn around and say Facebook is doing much better than it was at the IPO opening, right? Alibaba? I don't think so, right? You have to check the price right now.
I can't remember.
But I know Facebook. But, you know, there's a lot of this has to do with management. And I would only say this. Why buy it on the IPO day? Let the company prove itself a little bit. Let it go down and up and down and up. And if you see something good about the company, I like Sheryl Sandberg, maybe not her politics, but I like the way she runs the company. She understood what she was doing. Facebook is a much different experience than Twitter. Twitter has a very hard time monetizing stuff. It's a very temporal social media experience, which is kind of what Snapchat is. That's why I wonder if they can sell advertising. I don't, listen, I'm not a millennial. Everybody keeps telling me that millennials have attention spans of, you know, of ants, and therefore they Snapchat might be their thing. So I don't know, but I actually like reading stuff, you know, to be honest.
Yeah, me too, actually. Actually read a newspaper in the morning. It's amazing stuff. That's a very good story. Very limited supply of shares, very strong demand, implies a pop, and then maybe it comes down.
It's like the Trump rally. I know you love the Trump rally, but I'm going to give you a little insight. P/E ratio, historically, is about 12, right? That's the price-earnings ratio, historic average on the S&P. We're at 25 right now. I don't care. I like his economic policies. But I don't buy 25 times earnings unless I see 15, 20% corporate tax rate on paper, stuff passed soon.
I think that's what we've been saying.
You've got to be wary about this.
If you see it, signed, sealed, delivered by August, then buy.
I'll buy in the dip, but I'll buy more in the dip.
But if it's not there, the thing goes down.
This year, it's crazy.
Very good story, Charlie. Thank you very much for being with us this morning. We do appreciate it.